Thank you. First of all, it's an honor to be here and really a pleasure to be here in Greece. It's an optimistic time for Greece, and it is also the case that I'm sitting here talking with you today and able to say that the banking sector in general is in resilient, steady shape. And that's quite a statement after what we've been through. The focus of the last 4.5 years while I've been at the European Central Bank sitting on the supervisory board has been really a focus on making sure that the banks can remain resilient in the face of incredible challenges. The challenges have been the pandemic, geopolitical challenges stemming from the north with the Russian aggression in the Ukraine, with respect to the concerns in the Middle East and the potential for conflagration there. Other geopolitical risks, we're focused on China, Taiwan, Iran, other areas. I mean, these are novel risks that the banks have to manage in the face of continuing to be resilient. We're in an environment where low for long went for quite long, and rising interest rate environment presented particular challenges to the resiliency of the banks. What is the mismatch potentially in terms of the asset liability management? What's happening with respect to underlying potential weaknesses in loans that are sitting on the balance sheet of the banks? It's the case that I can say hand on heart that this resiliency has been something quite remarkable, and creating confidence in the banking system with the start of the SSM is something that we've really benefited from. But it's not the case that as I sit here now that I'm sanguine or complacent about where things can be going. And we continue to be very focused on making sure that the banks can withstand the continuing challenges. We survived also last March without a very significant blip. And these were emanating from markets that you wouldn't have expected them to come from, with the US, with Silicon Valley Bank, First Republic Signature Bank, Credit Suisse, Switzerland, and of course the gilt market issues. In the UK, our banks continued to remain resilient. They're well capitalized, the liquidity ratios are strong, but as we look forward, we want to make sure that the novel risks are being taken on board in a very sophisticated way, that climate and technology and digitalization plans are being taken on board in a sophisticated way, that institutions are focused on their future profitability and making sure that they have correctly taken on board adverse scenarios with respect to the headroom that they have for capital. So bottom line, the state of the banking sector is resilient, and our focus going forward is on maintaining that resiliency in the context of, quite challenging times.